Welcome to Real Estate with Tracy. My name is Tracy Gerard, your trusted and dedicated realtor. Now, on this show, we discuss all things real estate. And today we are bringing back Ryan Weiderhold with Guild Mortgage. Now, Ryan is an experienced lender and trusted partner that I often work with. Now, we're going to be discussing current market trends and advice for first-time home buyers. So stay tuned. Let's talk about it. Reach me at 804-400-0456. Welcome back to the show. Let's welcome Ryan Weiderhold. Welcome, Ryan. Oh my gosh. You got batteries for the platform.
Perfect. I love it.
All right, Ryan. We know that you have been with us before, but for our listeners who have not heard you or seen you, tell us who you are and tell us what you do.
All right. Well, I'm Ryan Weiderhold. I'm a mortgage lender. I've been doing this since 2015. Helped hundreds and hundreds of clients buy a home or refinance a home. And I primarily work here in Virginia.
Alrighty. So let's just jump right in. We're going to talk about market trends, and we're going to talk about advice for first-time home buyers, because it's one of the things that we specialize in.
Absolutely.
What are you seeing in the market?
The market, it's always a good time to buy, right? That's what they always say. It's always a good time to buy. And I would, right now is probably a better than good, right? There's a good time for people to get into the market. Yeah. We're seeing some better deals. You're not having to offer your firstborn child, on a contract right now, which is great. There's lots of assistance out there for first-time home buyers, and negotiating with the sellers is happening more and more than in years past. So you're able to get into the house that you really want at the price that makes sense.
I do. I'm seeing that a lot too. I work a lot with buyers, but I'm seeing that sellers are, you're able to negotiate.
Yep.
Okay, sellers are paying closing costs.
Yeah.
And sellers are doing price reductions. I can even say on our flip properties that we have, like we've had to do some price reductions and pay some closing costs to move them. So that is great for buyers. So let's talk about interest rates.
Sure. So everybody was really concerned about rates for the longest time. I would say that concern is kind of subdued, right? We don't have people that are like, I tell them, hey, the rate's going to have a 6 in front of it. And they're like, oh my God, it's the highest thing in the world.
That's just like normal, though.
It's more normal. So probably the healthiest market is going to be the rates in the 5s. We're not quite there yet, but we're trending in that direction.
Right.
I would say right now, depending on the product that you're trying to qualify for, your credit score, down payment, all those things are factors in what determines an interest rate. But it's either going to have a 6 and it's going to be in the low 6s, or it's going to be a 6 with a high 6.
But we're definitely in the 6s.
You're in the 6s.
You're in the 6s.
I would say 99% of the clients right now that are buying a house are in the 6s, unless they're deciding to buy the interest rate down and want to spend a little extra to get a better rate. But that's where you're really going to be right now.
All right. So I always say too that it's always a great time to buy and sell. So when people ask me like, hey, how's the market? Is it a great time to buy and sell real estate? It is always a great time to buy and sell real estate, because it's great for someone. Yeah. Right? Yeah. If interest rates are high, it still could be great for a buyer, because they're not in competition with a whole bunch of people. Like, people are waiting for interest rates to come down.
Well, rent's higher.
But when rates are higher, when rates are lower, that could be great for a seller, because they have competition. When the market crash, that's great for investors. Yeah, it's always great.
It's always a good time to buy.
It's always a good time to buy. But I think it's definitely a good time to buy now, especially for folks that were looking last year and said that they were going to wait until this year.
Yep. I've been looking for those people. I have lots of clients that told me they were waiting. So now I'm trying to find them.
Where are you?
You got to come back and see me.
Come back, yeah. It's a great time to hop off that fence.
That's right. You're not waiting until next year.
And hop back into the market. So let's talk about that. They hop back into the market. What are some of the advantages of buying right now?
Kind of like we talked about with being able to negotiate.
Yeah.
Right. That's the biggest thing. Also, right now being in the market right now, there's a lot of money as far as assistance programs too. So there's a lot of money out there to tap into if we're looking for down payment assistance programs, things like that. It dries up towards the end of the year. A lot of that money is allocated towards the beginning of the year, and it gets a little bit harder to find as you get towards the end of the year.
So when you say find, like, tell us about that. Like, so money is, we have to wait until it's replenished.
Yep.
So right now there's money available.
Yeah. So
how do we determine when that money runs out, or there's no determination?
There's really no.
When it's gone, it's gone.
It's just gone. It's gone. So really, the biggest thing is working with a lender that has access to multiple grant programs.
Okay.
Now there are some programs that technically never run out of money. Like us at Guild, we have a program that we call Zero Mortgage. It never really runs out of money. There's always funding available.
How does Zero work? That not all lenders have that.
No, so Zero is super cool. It's an FHA loan, and the entire down payment, which on an FHA loan, your minimum down payment is 3.5%. We allow that 3.5% to either be a forgivable second mortgage. So essentially, we take your down payment, we cover it with another loan, but there's no payment on that. It's forgiven. Once you're living in the house for 36 months, once you're there, made on-time payments for those 3 years, all that money is forgiven. There's also another option that ties into it is you can do a repayable option. That would be if maybe you don't expect to be in the house for as long, but you still need the assistance. We'll set you up for the repayable version. Still, entire down payment totally covered, but your payment might be $100 more a month or something like that.
So are the qualifications the same for that?
They're actually super loose for down payment assistance program. It allows as low as a 600 credit score.
Really?
Where
That's good.
most assistance programs start at 620 or higher. So it fits a perfect like void for people that miss out on other programs.
Right. Yep. And it's perfect for a first-time home buyer.
First-time home buyer, and the crazy thing about it is you can use it again. You can use that you could be buying your 6th house but still want down payment assistance.
Really?
We can actually use that program again.
So wait a minute, let me get this straight. Like, so if you currently own a home, let's say you're currently own a home, you're selling your home.
Yep.
You can still.
Yeah, so that's interesting story. I actually have a client that is selling a house, netting a decent amount of money selling this house, but they are going to use that and go invest. And they're not dumping all the equity into the house, the next house. They're actually using assistance to go into it with almost no money.
That's awesome.
They can do it. And
awesome.
it depends on the person, right? Sometimes people might think that's a bad idea, but for them it makes sense. That's what they want to do.
I like it. So you made a video on Facebook or TikTok, something, right? You're always making videos. You make some really cool videos, by the way. But you made a video about the cost of waiting to purchase. Okay, and I thought it was really cool. Talk to us about.
Sure. So it's something that people don't think about too much, right? So if just put it in perspective, we buy a house today. Let's say we go into contract right now, and just keep the numbers really simple. It's $200,000, and your mortgage payment is $2,000 a month.
Right.
Okay. You're like, oh, it's too much. But the interest rate's 6.5%. You're like, no, I'm waiting until next year. The rates are going to be better. You're like, all right, great. So we wait a year. Now the interest rate is, instead of 6.5, it's 6.125. So interest rate's a little bit better. But that same house, because appreciation here in the Richmond area is about 7.5%. That same house is now going to cost you $217,000 That mortgage payment is actually the same, if not more. Because you've waited and the house now costs you more to buy. And at the same time, if the house has cost you more to buy, taxes have gone up because the county's going to get their piece of that real estate pie. Your insurance has probably gone up because you're insuring more expensive property. All because you wanted to save a little bit on the interest rate, but it doesn't make sense, right? And during that time, you've technically lost out on that $20,000 of equity that now you're paying extra for. You could have gained yourself if you would have bought before at a higher interest rate.
Right.
So there's a ton of money on the table that people miss out because they want their payment, they think their payment's going to be a little bit cheaper.
Right.
And the math just doesn't math. Unless that rate's going to drop from 6.5 to 5, which we don't see, right? Those drops don't happen unless we have another COVID.
Right.
So it always makes more sense to buy now, gain the equity and the appreciation, than to hopefully see rates drop a little bit.
Right. And just keep in mind too, if you, let's say for instance, you bought at a 7.5%, and maybe you got a really great deal on a house because rates were higher, you can always refinance. When rates come back down. So just keep that in mind too.
All my clients that are closing right now, I'm telling them they are not in their forever loan. This is a loan you will refinance. We'll get you into a better deal whenever it makes sense for them. Right.
And you guys keep track of that, right?
We do.
Like you kind of stay on top of it. If rates drop and it makes sense for your past clients, you reach out to them
For sure. Yep. They get put in the system. The system kind of helps me keep track of that. And every day we're seeing where the rates are compared to where people are closed in. And then if it makes sense, we present an offer.
You made another video that I want you to touch on.
She's stalking me.
You make good videos. So you made another good video about people who has a lower interest rate, right? So they have a lower interest rate, but they have a ton of credit card debt.
Oh yeah.
And they are scared to. Yeah. They have equity in their house. So you have a lower interest rate. You have a lot of equity in your house, but you also have high credit card debt.
Absolutely.
What is a good way to make that make sense for them to refinance, pull the equity out, they have a higher rate,
Yeah.
but it still make more sense payment-wise to get rid of the credit card.
Talk to me.
Talk about that.
That's what will make more sense is talk to me. So it's crazy. I can do some reporting to show you how, and here's where it comes down to very simple, right? If you have a 3% interest rate, and you're like, I don't want my interest rate to change, but we're struggling to have cash to pay all of our other bills, the interest rate is irrelevant. It doesn't matter because you are paying anywhere from 20 to 30% on that high interest debt credit cards. And here's the statistic: people, you're not alone, right? You are one of millions of people that have credit card debt over $30,000-$40,000.
Yep.
But you also are sitting on hundreds of thousands of dollars of equity in your house because the interest rate's so low.
And you're scared to touch it.
You're scared to touch it, but we're struggling to make minimum payments on credit cards.
Yes.
And what will happen is eventually you'll miss those credit card payments, and then you can't tap into that equity because you're going to struggle to refinance because your credit score is going to be too low. So you have to make that decision before those things happen.
Right.
And I can easily break it down for you and show you, okay, if we go from a 3% interest rate to a 6% interest rate, but we pay off $30,000 in debt, we might be cash flowing, being positive $1,000 plus a month. And what's even crazier is people are like, well, I've only got 20 years left of my mortgage. Well, I can actually show you how to take some of that savings from your credit card minimum payments that now are paid off and apply it straight to principal and still pay off your mortgage at the same time. There's so many ways to use your house as a tool. And don't be scared because your rate's 3%. You're like, I don't want to lose that rate. It doesn't matter if we're struggling with everything else.
The benefits of
homeownership.
It's just so many benefits to that. I just love it. But I love that because a lot of people don't think about that. They just look at the rate like, oh, I got a 3.5% rate and I don't want to get rid of it.
I just need 30 minutes of your time to show you that it makes sense.
It's 30 minutes. That's it.
Yep.
Is that like a hard hit on your credit? Like if
we don't have to. No, we can just talk through it, or I can even do a soft credit inquiry, or we can just hypothetically say, hey, I got a 700 credit score and 40 grand in debt. What's it look like for me? We can talk through it.
I like it. I like it. So if you are a first-time home buyer, I think I don't think, but I know. The advice that I would give to you first, before you contact Ryan, would be to pull your credit report.
Yeah, absolutely.
Right? Isn't that important? Like, let's just face it, fraud and identity theft is out there. And these thieves are getting just more and more clever at stealing our information. And so the first thing that I would advise you to do is just go to annualcreditreport.com. So it's www.annualreport.com. I know a lot of people go to Credit Karma and things like that. So they'll give you a score, and that's
not right.
And that's great.
It's not right. How many times people tell me they have a 700 credit score on Credit Karma, and then I pull their credit, it's a 640. Yeah. I mean, I probably wouldn't have to do this anymore. I'd have a lot of money. And it's not their fault. It's just Credit Karma uses an entirely different scoring model, and it doesn't pull all the same data, and it's just setting you up for failure in the mortgage world. So don't rely on it. Talk to an actual lender that can get you a score.
Exactly. But before you do that, go to annualcreditreport.com.
Absolutely.
Pull your credit. It's not going to give you a score, but it will give you a copy of all 3 credit reporting agencies. It is free. It will allow you to do this once a year. You could go on and you could pull your credit. You will be surprised at some of the inaccuracies that are on people's credit reports. And it'll give you the opportunity to go ahead and start taking care of that stuff. You know, if you stay on top of it, it's just just
a random collection account that you didn't know about.
Yeah, that you didn't know about.
You know, medical bill for $110. You didn't even notice. Yeah, and it just sits there. Yeah. So, but it's affecting you in some way. So, it's a best piece of advice. So
you definitely want to go there, and then you just want to reach out to either myself or Ryan. You can reach me at 804-400-0456. Again, that number is 804-400-0456. Or you can reach Ryan at
804-814-1001.
Repeat that.
804-814-1001.
Ryan and I have been working together for quite some time. Yes. How long? A very long time.
Well, since I got in the business.
Yes. But he is just a wealth of knowledge. Very, very smart in what he does. And I just really enjoy working with you. Thank you again for coming on the show.
Absolutely.
We're going to come back next quarter and we're going to do some more updates and some more fun stuff. So
thanks, guys.
Thanks for watching, guys. See ya.